Let's look at something today that is confusing a lot of persons, and that is the difference between the internal structure and swing structure. Market structure gives a lot of concern to traders. Now, if you do not understand market structure, no matter what you try to do, it will never work. Market structure is simply the shape, the form, the movement, the anatomy of your chart. Under market structure, we have the trend, and under trend, they are divided into three. We have what we call the uptrend, we have the downtrend, then we have the sideways trend. There are things that are tradable, there are things that are not tradable. This is trend, the first aspect of market structure, and that's what we're going to be looking at majorly today. What is an uptrend? An uptrend is simply when the market is having higher highs and higher lows. Simple definition. What is a downtrend? Lower highs, lower lows. What is a sideways trend? It is non-directional. When we say something, okay, higher highs, higher lows, we have swing lows, swing highs. If we are to expect a buy at a low, the major low is called a swing low. This is called a swing high. This is not a swing high yet until it begins to come down a little bit. If I have something like this, how do I know that this guy has completed its movement? That's the difference between swing structure and internal structure. Because I know most of the time the question people ask is, okay, on what time frame are we going to now know this structure, this uptrend? What time frame do we use to ascertain an uptrend or a downtrend? So if you are a day trader or a scalper, your trend as a scalper can be on 1 hour. Your trend as a day trader can be on the daily time frame or 4 hours time frame. As a swing trader, your trend can be either on daily or on the weekly or even on the monthly. But as a position trader, you use 3 months, 6 months chart, and yearly chart. There are two types of structure. One is called the internal structure, and the other one is called swing structure. Internal structure is basically the little movement within a major wave. This is a swing structure. Now, where is the internal structure, the little waves? Look at it here. The blue one is the swing structure. The black one is the internal structure. The blue one is your higher time frame, and the black one is your lower time frame. Your higher time frame, which is maybe daily or weekly or monthly. But the lower one is the smaller one is your lower time frame. Do we understand? If your Fibonacci is telling you it's time to buy, ladies and gentlemen, this is the 78.6 area. You don't just come here and place a buy. You can do it, but your stop loss is going to be very big. This stop loss is around 720 pips in order to make what? 2,800 pips. Okay? So now this is, let's say 1:4. That is for trader A. Trader B instead decides that I am going to wait until the internal structure changes direction. You can even say, okay, let me choose 50% of this particular area. Alright, I'm going to come to 50% of this particular area. Your stop loss is still what? 368 pips. Okay, you see, market came into this place, 368 pips. But a person who believes the market is fractal in nature and he's waiting for internal structural change, the guy will just come to this internal structure here. He will wait. Market is doing lower lows, lower highs, lower lows, lower highs. When market now breaks this lower high here, that is what we call a change of trend. When market breaks, this is now a change of trend. Just like I told you that time, the guy will now come here and now use Fibonacci on this smaller one. He will now wait for the market to come to this smaller side. And what is that going to give us? From 370 to 175. And he will still target the major one, which is here. You see, this guy that has 1:18. This is how we get a big risk to reward is by entering a trade on an internal structure. How would you take your first profit? You can take your first profit here. That's the place where the market reversed. That's the first place, because market can do anything, can continue down, but you can leave it to here. Where is now extension? All those other things is still the same place. Extension 0.27. You can still go further. You see, 1:23. This is on monthly, ladies and gentlemen. So you now imagine taking 500 pips with only 10 pips stop loss, or with 20 pips stop loss. That is you trading from an internal structure. The two of them works. It just depends on you. Which one would you prefer to use? You remember this guy? Higher lows, higher highs. Yep. Good. And this, we're expecting this to go up. So look at it. It's even a monthly demand. So the market is moving from a monthly demand. So now, guys, this is a swing structure. All these big ones that you're seeing here. But all the smaller ones inside, you see them? They are the internal structure. If we change to 2 hours or 1 hour, you see them? I like this. You see the internal structure on this particular guy now. You're having this high lows, high highs, high lows, high highs. So you see now, you see it. So this guy has to be broken before we say, market has shifted. Even at this point, look at it. How did we know market has shifted at this point like this? Let me change to 1 hour so that you see it clearly. You see that all these are just a wave. See, it's just one wave. This is just one wave, ladies and gentlemen. So now, how did we know the market has changed? Please watch. Sorry, this was the particular high that broke this guy. All this one, they didn't break it. It was from here. So until this guy is taken out, before we can say we have changed trend. Look at what I'm saying, ladies and gentlemen. You see it? So on your daily, it's a higher low that can give you maybe 100 pips stop loss, 200 pips stop loss. But on the 1 hour, there are two things here. There is the regular divergence, which is this one. It's a bullish engulfing candle. You can actually get in after the bullish engulfing candle. Please open your eyes and pay attention. Bullish engulfing candle. You can actually get in here. You have already taken your 1:2 and you are out. But people who are advanced, they will not look at this. They will look at, okay, this is where price is going to. There is a divergence. Good and fine. When price broke, we will expect price to retrace. So the last sell candle before the buy move, that is what market will always use. Look at it here. Bam. This one here has been used. There's no candle that is free except this guy. And ladies and gentlemen, if you put your stop loss here, this is 8 pips. You saw it on the daily, but you entered where? On 1 hour. And when you entered on 1 hour, you still took your first profit at this point, because you don't want stories. This is 1:105. Look at all this journey. How many days did market spend before it gets there? 44 days before market got there. This is why people lose a lot, because you are thinking in internal trend. No, your entry should be the internal trend and your exit should be swing structure. Do you understand? All right. So ladies and gentlemen, that's the difference between the swing structure and the internal structure. We noticed there was a structure that the market is coming into, but we are not satisfied with just entering there. We want to drill it down. We now went to our lower time frame to get our entries. That's what we did. Look at this guy also. Market was going up, market was going up, market was going up. We now finally have what? A higher high broken. Market came and broke the change of trend here. Just the same thing that we have down there. And what happened? Market came back up to retest it. 78.6. It wicked it. It touched it like that. See it. This is 1 minute chart, by the way. 1 minute chart. How many pips is this one now? Like 4 pips. Market got as far as 163 pips, and that gives you what? 1:2. So see, it is very, very simple. Very, very easy. Where the work is in you identifying this particular structure is still the same thing that we have been saying, ladies and gentlemen. It's the same thing. This is the values. It's the same thing. When you find the values, good, enter on that one. Then you now wait. If market breaks it, you now wait. If it comes back to that particular zone again, it's an easy something. And by the way, hope you guys are subscribing to our YouTube channel. So while we wait for this guy to load our YouTube channel, we were on 30 something. So right now we're on 43. This was our class. 1:30. That's simple moving average. Yes. What we did on Thursday, I just took out a little bit from this place. So there are other videos here too. Okay. So we're growing, guys. Don't wait until we are 1 million views, 1 million subscribers before you tap in. Do we have any questions?